Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris Rapeseed, Winnipeg Canola and Malaysian palm oil markets.
Paris Rapeseed. Since mid-June until October, the market had been trapped between a congestion band below between 438 to 445 and 3/4 and a congestion band above between 513 and 3/4 to 519 and a half. During this incarceration, the market has constructed a head and shoulders pattern, looking more and more like a head and shoulders top right now, as well as an extension to its second shoulder from mid-August until the start of October. I've highlighted the preliminary neckline for this head and shoulders top in dark blue on my daily chart, and it's currently at 449 and a half. The problem the market's had has been the sheer amount of force necessary to push down through this head and shoulders drop and try and fulfill targets below. Now, what I mean by this is that we not only have the neckline to try and push down through, but nearby has been the previously mentioned congestion band between 438 to 445 and 3/4, which contains the March, April and June 2013 highs at 442 and a quarter, 442 even and 438 even respectively. It looked as if prices had finally managed to break lower in early October, but the market turned back up and into the congestion again with a hammer pattern that led to a gap higher. It was only late last week that we saw another concerted attempt lower that ran into the middle of this week before a pullback up. However, the pullback up has been more limited than the previous attempt, and thus it will be very interesting to see as to where exactly we close this week. Nevertheless, we are below the neckline and currently just entering, been in there, but we're just entering the congestion between 438 and 445 and 3/4. Well, it would seem appropriate now to lay out some potential targets below for such a head and shoulders top pattern if it actually comes about. Hence, the primary target X is in the 400 even zone, with a secondary hard to reach target X1 in the 354 even zone. Such a move would be very, very interesting, as we have had, or have actually, alternate neckline 1 currently at 401 even and alternate neckline 2 currently at 404 even, both from the November 2019 to February 2020 head and shoulders top in the way below. They are highlighted in bright red and green respectively. Plus, there's also the December 2020 low at 396 and 3/4. All of this is in a way, and I would note that these three supports stopped the fall of this market back in May this year. Winnipeg Canola. The key patterns here have been the July to late September double top, one which I have had originally doubts about, but which we've seen play out to both primary and secondary targets, which is nice. Then below that, the mid-April to early July reverse head and shoulders bottom, specifically the neckline, which is highlighted in purple on my daily chart, and that's currently at 703 even, and which is still influencing the market. And finally, what I consider the most important pattern here, bar perhaps this neckline, and that is the bearish Andrews pitchfork, created by the earlier double top of the mid-July to late August move, which is highlighted in bright red on my daily chart. On this last pattern, the market is at the moment just above the middle time, currently at 687.70, and has exhibited an affinity for this middle time since mid-September. Okay, so the overall pressure has been bearish, with the double top and then the bearish Andrews pitchfork. However, enter now the previously mentioned neckline in purple, which, despite moving lower, had started to slow the decline and even moved the market away, up and away from the center time and towards the upper time, currently at 733.10. Now, as I said last week, this situation cannot last because we already have seen the neckline cross over the middle time, and it will cross the upper time by the middle to the end of November. Well, it seems the market may be taking the first steps in a decision about all this, as prices dropped down late last week and earlier this week below the neckline and the middle time. We have seen a recovery yesterday and today, but so far it has been limited as prices have only managed to peak above the middle tine and not the neckline. As I said again last week, and I quote, keep a close eye on that purple neckline, as what the market does there will, I believe, become significantly important for the future, end of quote. Looking below the middle tine, well, we really don't have that much support until we start looking at the June 2021 high at 655.90. One final point, and it seems it may start to resolve itself by maybe next week's commentary, and that is also to keep an eye on the declining medium moving average, currently at 754.90, the declining long moving average, currently 757.60, and the declining short medium moving average, currently 757.10. At the very least, we have a dead cross here of the short medium moving average down through the long moving average. And we might have at the most, well, despite them being in the wrong order, we might have at the most a possible 3 moving average bow tie formation in the offing. Bursa Malaysia crude palm oil. The mid-August to early November 2022, that's right, August to November 2022, mildly bearish shift pitchfork, that's the one highlighted in dark green on my daily chart, is still running the show here after so many months. This mildly bearish pitchfork has guided prices more or less lower, initially in between the upper tine, currently at 40.65, and the middle tine, currently 34.33. Then for a while in May and June between the middle tine and the lower tine, which is currently at 28.01, before prices move back up again in between the middle and upper tines, mainly around the upper tine. The upper tine is currently being reinforced by the rising medium moving average, currently 37.57, and the flatlining short medium moving average, currently 37.42. Additional to this, the slowly declining long moving average, currently 38.14, is not too far overhead. And last week, that truly kept the market's rise. Going back to the action seen in July, back at that time, prices formed a diamond pattern type from July to early September. And it was in early September that we saw prices punch down and out of this diamond pattern type. The primary target for this pattern on the downside was in the 35.79 zone, with a harder to reach target, a secondary target X1 down in the 33.75 zone. Now the primary target was achieved 3 weeks ago, but the harder to reach secondary target X1 is still out there and still open. Now there is another potential pattern I'd like to discuss, and that is the potential early September to date reverse head and shoulders pattern. I cannot tell us yet whether this is a fully reverse head and shoulders pattern, as it's not yet fully formed. We still have to construct the second shoulder, but I thought it important to bring it to your attention. The neckline is not highlighted on my daily chart, but today you can see it drawn there. It is currently at 38.34, just above the long moving average. Additionally, it's way too early to say if this is a traditional reverse head and shoulders pattern, reverse head and shoulders reversal pattern, moving it back up the market, or it will be the rarer reverse head and shoulders continuation pattern. There is also one other pattern, a very recent one, which is formed over the last 3 sessions, and that's a possible 3-day bullish morning doji star pattern. I'll have to see tomorrow's action, that's Friday, if that actually comes through. It's too early at the moment because there's so little activity, but it's an interesting pattern to keep a close eye on. And it would probably mean a pressure through the short medium, the medium, and also the upper tine, and maybe even an attack on the long moving average. All of these things we now have a chance to look forward to in the next week or so, or even maybe the next day.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.